Hi everyone, it's Friday, January 24th. It's 3:35 p.m., so 25 minutes until U.S. equity markets close. Another big down day today. We're going to talk about that and what we can maybe expect going forward. So please take a moment to read over the risk disclaimer, which should now be on your screen, and then we'll begin. All right, so daily chart, E-mini futures. We gave up the 50-day today. Without, pretty clearly, all right. 50 days about 805, about 15 points below that. 50 days been big. Okay, it was the last time we dipped a little. Right, it was the 50 day that saved us. Took it 3 days or whatever, but it was what launched us higher. Before that, back here, June, April, February. All right, so every couple months. But today cut through it pretty easily. Last time we cut through it pretty easily, though, it was the 100. It was the 100. It was the 100. All right, so all eyes now shift towards 1768. All right, which gives us, another 20 points of downside, about another 1.5% or so. So that in and of itself, even if that's all we get, that could still be significant. So we gave up that today. The Nikkei looks not good. All right. 14,750 or so is going to be the major level to watch. It's this ascending trend line, all right, that dates back to June 6th. It is also pretty close to the measured move of this head and shoulders top. So we may see a bounce there, and then we'll see if bears can push us even lower going forward. All right. One other thing I think I want to note. This is a different E-minis chart. I just want you to check out the volume. All right, the volume on these last two sell days, above average, highest volume that we've seen since this big buy day back here on the 18th of December. All right, so this is not a low volume move. This is the highest volume we've seen all year. It's the first really significant volume that we've seen all year, and it's to the downside. All right, so note. Go back to E-minis real quick. Note, high of the year, all right, this high was technically made, all right, on the 31st of December 2013. I'm going to count it, all right, close enough, high of the year, first of the year. Consolidation in a bullish uptrend, all right, and it should have probably been able to push higher from here, and then we see a sudden infusion of pretty significant volume to the downside, and we start pushing below some technical levels. All right, so there is some backing to this sell-off here. Other backings, all right, are coming from emerging market currencies. This is the Turkish lira, dollar against the Turkish lira. We're up pretty significantly, you can see, since, basically, the 13th of this month, all right? Every day has been an up day. Today, accelerating to the upside. As the last 2 days, you've seen very significant risk off flows hitting this, all right? People bailing out of emerging market currencies. The lira, the Brazilian real, the Argentine peso, the Mexican peso is another one that we can look at, okay? Although not so much second half of today. But you can see we touched, above 13.6 as people are starting to bail out of these emerging market currencies. That's the first sign, all right? When risk sentiment globally starts to turn, emerging market currencies get hurt first because they are the riskiest, FX trade out there. So we've seen them suffer, again, more credence to the idea this may be a significant pullback. The Aussie has suffered as well, down over 1% at its low today, down 0.75% now. Kiwi has actually been holding in there pretty well, but that likely won't last if this continues to last. All right, the Kiwi won't be able to hold on much longer, and when it goes, it will probably go pretty brutally. But it's really this 200-day EMA that's been holding it up pretty well right now. You can see these last 3 wicks. All right, every time we get down there, we see a pretty SPRY bounced to the upside. Other ones that have been hit hard, all right, Euro Aussie obviously has pushed itself higher. 158.30. It's already 118 points off its highs, though. That's actually due to Euro Dollar. Euro Dollar actually did a nice, cute little fib move today. Okay, it rallied up right into that 6.8% fib and fell from there. All right, so potential new lows below 135 coming on Euro Dollar as the downtrend appears to be holding dominance right now. Pound Dollar, that is a nasty candle. All right, 164, about 100 pips lower, is the support level. Dollar Swiss, okay, testing its support level. 89 held, we bounced. Looks like we're probably going to squeak out a close above that descending trend line. So Dollar Swiss looks decently poised for more upside. The yen pairs have all gotten killed. Dollar yen at support. Pound yen trying to break down out of its head and shoulders. All right. Euro yen, kind of actually ugly. A little bit of an exaggerated right shoulder, perhaps on the head and shoulders. Aussie yen, big selling pressure today and yesterday. 91 or so is resistance now. CAD yen has been beat up for quite some time. It's actually hung in there better today than most. I think probably due to the fact that it's been sold so hard. It's only down 0.4% today. Dollar CAD, all right, a little bit lower. Again, same thing. I think CAD just so beaten up that it's just taking advantage of liquidity and moving itself lower. What else? Some of the pound crosses. All right, pound Kiwi. You can make an argument that this is the right shoulder of a head and shoulders, putting the neckline somewhere down here. But pound Kiwi, to me, not really that clear right now. And I think, like I said, when we see the Kiwi finally start to move lower, pound Kiwi and Euro Kiwi could really take off to the upside. So I'd be careful about being short them, because I think they could squeeze at really any time. So in short, all right, if you start to look at these indices, Dow futures clearly beat up. All right, NASDAQ futures look better than the other ones, but they're still finally starting to give way on their channel as well. We already looked at E-minis. E-minis do not look good. All right, the Nikkei doesn't look good. So I think that there is some weight behind this move, and we could see it extend at least into a third day. So I would be cautious about what you go home with the weekend holding. Could see some violent action on Sunday. So sort of keep your eye out for that. Watch support and resistance levels, and really just sort of keep your eye on the stock markets and see, you know, if we're going to continue to see risk off, we should continue to see that Aussie dollar liquidation occur. We should see the Kiwi follow it. We should then see the euro and pound start to weaken against the dollar and yen, more so than it has already against the yen, I suppose. So those are the things you got to keep your eye out for. You know, good luck. Stay cautious. Don't do anything crazy. These markets are in a very strong bull trend. This could still yet be another sort of bear trap where we push down to that 100-day EMA, all right, on E-minis, and suddenly jerk everything higher and take out all those weak shorts. So be careful, but don't be afraid to take advantage of some of the opportunities that are out there. We may be seeing some sort of significant shift in sentiment. All right, good luck. Enjoy your weekend. I'll talk to you soon.